Good morning, everyone. Hang on here a second. I got a little technical stuff to do. Okay, I think that's all fixed. Hang on here. We'll get the screen share going on. Welcome back to our Monday morning trading room. I trust everyone had an enjoyable long weekend. I certainly did. All right. What a difference 4 days make. The market opening with a rather large gap here this morning. Hang on a second. We're going to turn here to the daily chart because I'm going to have to scroll through too much on the Eagle. This here was actually Friday's session. As you can see, Friday, I suppose, overall was relatively active. Certainly as much trading going on as there was Thursday. Do I have my dates right here? Hold on a second. Yeah, Thursday there was an electronic session. But you can see a very, very quiet day overall. But here we are, opening with a rather large gap. Remember, the market closed down here near 6,500, and here we are opening around the 6,620 zone. So that's leaving us with a rather substantial downside gap, and that could be showing some very bullish momentum here to start the day, maybe. We're kind of trading toward the top end of the recent ranges. Hold on a second here. I'm going to grab that daily chart again. So if you take a look here, you can see we're kind of at the top end of the some of the highs here from last week. And so if you identify this as a teeny tiny trading range, then what we would be looking for is we would be looking for a breakout, a retest, and evidence that the market can stay outside of that trading range, in which case we can probably expect prices to head higher. Of course, if the retest fails, then there's a very good chance we're going to try to test the bottom end of this little support zone. So that's the plan right now. That's what we're kind of going to be looking out for. We'll see whether or not they follow through on that. Very interesting here. David says he was trading crude oil on Thanksgiving morning. Lots of volume and busy, which was surprising. That is surprising. And David, while you're in the room here, I know you sent me a couple of emails regarding crude oil. And maybe while we're waiting for the market just to settle in here a little bit, we'll take a look at your emails. All right, so David's asking, here are 3 crude oil charts. I'm struggling with continuous success, meaning profitable all the time. Consistency is a huge obstacle. It's probably the biggest obstacle to overcome in trading. Okay, so David says I'm using crude oil, and I used your chart setup with a 4-tick chart. So you've got your clouds set up 6, 3, 4, and 3, and the hawk bars at 4. I trade 2 contracts, a 12-tick stop, and then first target at 12 ticks, second one at 25 ticks. Okay, David writes, you can make a lot of money when price goes, and a few stops can take care of all your money plus some. I found that some signals on the 4-tick chart look right, but then it reverses and goes the other way. Now, that's one thing you will notice on the smaller you make your chart, your brick size, obviously the more signals you're going to produce, but producing a lot of signals, of course, is not the name of the game. Here's the Hawk Scalper. We're producing lots of signals, but of course we want to hold out for those signals that are going to offer us the highest probability. All right, so David asks, so hard to know when to take a new signal, so I added a few days ago to the original 8-tick Raptor chart setup, 12, 3, 8, and 3, and the Hawk bars are 6. I did that to get a better overview of the direction on the 4-tick chart. Had a long signal, but the 8-tick was still below most clouds. I was waiting and then went short. It worked out, but seemed as we get closer to 11 a.m. Eastern, I give money back. So I added a 12-tick chart to see if I could get a better overview of market direction. Okay, so my two questions are looking at trying to keep focus on market direction so I don't take signals that aren't true. What should my largest chart be? It's 12-tick now, but I have different but should I have different cloud settings? Okay. So let's take a look here at David's charts. And it looks like you're using MACD down here as well, which is fine. Okay, so this will be the 8-tick. This will be the 4, this will be the 8, and then this will be the 12. Gotcha. So I guess what you're asking me is, in a similar way that we use sometimes the eagle to judge our direction, David's, I think, asking, should I be using the 12-tick and trading in sync with that? A short answer, yes. You know, there's nothing wrong with that. I think if a larger tick chart helps you determine trend, then by all means go with it. The thing with tweaking your indicators or even tweaking your system is that it's a never-ending process, right? You're never going to get it all right. As you can see here, your 4-tick is bullish or trying to get a little bit bullish. Your MACD reads a little bit bullish. Your 8-tick and your 8-tick MACD is starting to get bullish, but your 12-tick is still bearish. I think just looking at this chart, even without any of the indicators on it, the fact that you've broken significant swing lows means that the market is going to favor, at least for the short term, a downtrend move. So when that kind of thing happens, I think you need to be looking more for shorting opportunities. So that means, you know, looking for your number 1 signal to develop, ignoring your number 2 signals, really, maybe throwing a trend line across the bottom here, looking for a trend line break and a signal. Here's your number 3 signal, which would have coincided with your number 1 signal. So long as you're staying with the trend, I think that's the important part. That's how you're going to eliminate some of your misleading signals. David also asks, would you suggest a training session or two with you? That's always an option, of course. And, we still have the Black Friday sale going on this week. If you wanted to purchase some one-on-one time, the discount applies to coaching time as well. Now, regarding the chart settings themselves, here is the rough relationship between your brick size and your clouds. So if you go to your Raptor settings, so you have your Raptor 2.0, the rough relationship is that the large slow cloud is going to be 1.5 times your brick size. Your faster cloud is going to be the same size as your brick size. And your hawk is going to be 75%, 0.75 times your brick size. That's just the rough relationship between it all. Now, trying to eliminate bad signals, I think, really comes down to trying to determine trend. To that end, your 12-tick chart is going to be very helpful. You could also, I know some people who even run like a time-based chart, trying to get that broader overview. So they'll take a chart and they'll say like, I don't know, they'll take like a 5-minute and they'll look at their 5-minute chart because it gives them a different perspective, right? So here was Friday's session, which we didn't trade, but it looks like there was a really strong move the first 5 minutes out of the open. Okay, well, that would make me bullish. Now, you would have had the same input on your Raptor and your other DTS birds. This was no mystery. But if you were trading the remainder of the day, as the market started to go a little bit sideways here, sometimes it's a little bit more difficult to decipher on a Renko style chart because you're going to produce a lot of bars. Or here, I'll go to the Raptor because you're trading the Raptor. You're going to produce a lot of bars and it's going to start looking like this. Okay, so to that end, the bigger tick chart is going to be a lifesaver because you're going to be able to look at it and you're going to be able to say, yeah, my trend is up or my trend is down. Or I have no trend at all. Those are your three options. You have to decide from those three. If you think the trend is up, you should only look for buy signals. If you think the trend is down, you should only look for sell signals. You should also know that not all signals are created equal. The market is not like it's not a machine. It's not punching out, we'll go with the widgets. It's not punching out widgets throughout the day. There are better times to trade. For crude oil, now the crude oil's changed a lot in the last couple of years. But it used to be that with crude oil, the morning session was the only time you wanted to trade. You would trade that first hour and a half after the open, and after that you would ignore it because it would just start to do some strange things. Now that, of course, is not carved in stone. Every so often crude oil would give you a really good afternoon session, but for the most part, you would ignore the afternoon session, and there was a reason for that. Same thing with the NASDAQ, same thing with the Russell, same thing with gold. Markets have their own personalities, and you need to spend a little bit of time with your market so you become a little bit more familiar with its idiosyncrasies. The last thing that I want to point out is that you don't necessarily have to trade more to make more money. In fact, as you've discovered, you could be profitable for the morning, and then the next trade or two takes away your profit and maybe even leaves you in a losing position on the day. You have to get comfortable with what you deem to be your best signal. So now I don't have the crude oil chart up here, but let's just say you're going to focus on finding the trend, and then let's say you find your number one signal is the signal you want to capitalize on. Note, you're only going to get one number one signal in your trend. Or okay, actually, probably the number three signal will be a better example because we're going to focus on trend first. Okay, so we're focusing on trend. We want to make sure we have a trend. So how do we know we have trend? Well, first off, a couple of things. Very often trend can be very obvious, right? I would say right now the market probably favoring a little bit of an uptrend. The other way you can determine trend is basic market structure. When you see like a test of the extreme, you see a breach of a significant swing high or low, you see a retest. At this point right here, you have your highest probability signal that the market is probably going to head higher. Now, note how much time has to pass before we get to that signal right there. There's going to be a lot of signals through here, many of which will work out. But if you're a small trader, and I don't know how much money David's trading with, but if you're the smaller trader you are, the more time you actually have to spend waiting for that ideal signal. Once you get that signal, this is time for you to get serious, time for you to load up. Because that's where the real money is. It's not in, trying to find a bunch of signals, but rather in finding that one signal that you can take with a great deal of confidence and go at with a larger position size. So let's say this is your number three signal that you've been waiting for. You feel really good about it. You're not going to frame it up this tight, but I'm just doing it for illustration's sake, that if you can get yourself to a position where you can trade multiple contracts, that's where the earnings are, right? If you're in a position where you can trade 4 contracts, go all in, all out on target, that's $400. And the market hits your target. There's a very, very good probability it's going to hit your target. It's not in finding this signal and finding this signal and finding this signal and ignoring this signal. That's not the answer. You can see we got 5 signals printing here in the span of 3 minutes, 3 or 4 minutes, 3 of which worked out, 1 of which was a stinker. Now, if you avoided the counter trend trade, you would have been just fine. But my point is, your objective is not to find more signals. It's rather to find the signal that you are willing to risk money on, and that will hopefully have a positive result. So David's asking, so the big question is, should the cloud settings be different on the 12 tick over the 8 tick? You could. Here's the deal. watch what happens when I increase the brick size here. So we're going to go a little bit more extreme. We're going to make this one 20 ticks. Going to make it 20 ticks without adjusting the Raptor brick size or the cloud settings. The larger you make your brick size, the thinner your clouds will become. The thinner your cloud becomes, the more you are, well, first off, you'll eliminate practically all number 2 signals, and you're going to eliminate most number 3 signals as well. You're only going to be producing number 1 signals for the most part. Friday here was a little bit of an exception. See, so you get a really thin cloud, so you're essentially going to be looking at cloud crossover signals, which will be your number 1. The reason the clouds are a little bit broader is to try to give you a better perspective of when the market is trending, plus it gives you the opportunity for a number 2 signal. So if this were now my 20 tick brick and I wanted my clouds to be more normal, and I'm using air quotes when I say normal, so 1.5 times 20 ticks is 30, 1.5, or the same right here, and 75% of 20 is 15. And you see what that does is it opens up your clouds a little bit. So it gives you a little bit more of a normal view. Now going from 8 ticks to 12 is not a huge difference. You're going to collapse your clouds a little bit, but I don't think it's a real big deal. The thing with the Raptor programming is we give you the default settings, but then the rest, it's much more tweakable, right? You can't tweak the Hawk or the Falcon or the Eagle that much. But with the Raptor, we left it open so that you could actually make some changes. Once again, folks, the secret sauce is not in what is the ultimate tick size for my chart. That's not the answer. That is what everybody focuses on, but that's not the answer to making money trading. The answer to making money trading is, A, do I have a trend? If you think you have a trend, then trade in the direction of that trend. Even when you think it's not going to work, trade in the direction of the trend. Avoid counter trend signals unless the conditions are really, really right. And don't trade too often. Don't be chasing every single signal just because the signal crops up. Try to look at the market structure and say, okay, is this a high probability signal? Is this a signal that the traders at Goldman Sachs have been sitting on their hands all day waiting for? And if you think it is, then yes, go for it. Now, are you going to be right all the time? No, of course not. It doesn't work that way. But you will improve your chances dramatically if you limit the number of times that you trade. See, like note here, even on this larger chart, note the number 2 signals. Both worked out. Are they the same though? No. Are you going to have as much confidence maybe in this number 2 signal as this number 2 signal? Well, I wouldn't. Why? Because we know the hard edge is usually the target for the number 2 signal. There's normally some sort of reaction as the market encounters the hard edge. Now, you would have made your profit target, but weighing the two signals, I would say, and I have the benefit of hindsight. My hindsight still being 2020. But even so, this is the better signal because the band is much broader, so I'm more open to a reversal. And I have a lot more room here to do something with this trade if the market decides to turn early. Now, I know that's a lot of information, but it's really not that cumbersome to process. Like I say, try to focus first and foremost on your trend. And then try to focus on your best opportunities. Capitalize on those. Don't trade too often. Some of my best trading days, I only traded 3 or sometimes 4 times if the market was especially strong. Okay, so here now this morning, we were looking at that bigger 20-tick chart and we said, okay, well, the market's in an uptrend. I'm going to ignore counter trend signals. I'm going to focus on with trend signals. And so far, it looks like we would have done very well just doing that. It's not easy. I don't want to make it sound like it's overly simplistic, but every time you go back to the well, that's the one more opportunity to make money, yes, but it's also an opportunity to end up losing money. All right. Well, we have a very, very nice bullish start here to the day. And let's take a look here now at our Eagle chart. Where we had a little bit of a sideways range developing those first few minutes. It looks like we had a breakout, a retest, a very nice continuation signal, or even this one right here, which was not quite a hard edge bounce, but very, very close. Wow, just checking the liquidity here this morning. I don't know, is this thing really working right? Is it following the December contract? Because that is very, very low liquidity. I guess we'll see when we try to place an order. All right. Things slowing a little. Yeah, if there's one tip that I could infuse into everybody's mind is in trading less is more. And I think you can take that almost across the board. Whatever it is you're thinking about trading. Should I add this indicator? Should I take another trade? And trading less really is more. At least for the retail trader like you and I. You know, if we're sitting in a room full of supercomputers and we have a whole team of PhDs trying to crack the market, that's a different scenario. All right, we're getting a little toppy, perhaps. We did have a very strong run up here, practically out of the open. The market took a little dip the first 5 minutes, it looks like. But since then, I guess about 10 minutes in, about 10 minutes into the session, we just had a very, very strong rally. That does open us up to a little bit more of a bullish day here today. Of course, I've waited long enough now that I really need to wait for a little bit of a pullback. I got a red bar buy signal here on the hawk that I could look to buy higher, or I could look to short. Remember, your red bar buy on the hawk anyways, tends to develop near the end of a trend. So you could actually look at shorting it. Is that going to be anywhere near a trend line break? Yeah, kind of. All right, now we're also going to produce our first micro macro cross signal. which, by the way, you can always use your red bar buy signal. Instead of actually trading it, you can just use it as an early warning that you may be getting a reversal signal. Now we're coming into a green bar sell, so we're definitely struggling here a little. Is this one of my best opportunities today? Probably not. We'll see. If we get a decent test of the extreme here, if the market starts to turn around, that does open up the possibility of a move lower. And let's see how broad our band is. Okay, so our band definitely a little bit wider here. This is now a number 2 signal. Now, that's a little bit more inviting because we've had the test of the extreme. We can visually see the market struggling. We broke the trend line. I'm too late to take it, but you can see it would have come down, hit our profit target, and boom, there you go. You make your trade. If I took 2 contracts, was all in, all out, there's $200. That would easily be my day, $100 per contract. And that was a signal that I could take with a great deal of confidence. Now that we are in a little bit of a pullback mode, we can keep a lookout for another buying opportunity. Maybe we'll get one of those. David, was that MACD that you had on your chart? Or was that something else? So many of those oscillators. Okay, MACD, he says. I was just going to point something out with MACD. You know, all these indicators that we have, they all have their pros, they all have their cons. They work until they don't work. MACD is essentially a momentum style indicator as well. I think what you'll find is that, and it will probably confirm your ATR. Like I said, there's nothing really new, but I think you'll find that when your MACD is positive above the 0 line, some of your buy signals will work out better. When your MACD is below the 0 line or it seems to be declining, your sell signals will work out better. But again, I'll leave that up to you to play with if you choose to continue with the MACD on your chart. And like I say, there's nothing wrong with that. The key ingredient is, does it help you make a decision? All right, well, the clouds, we're back into the hard edge here. This is normally where we expect a bit of a reaction. Yeah, David says, I put the the Raptor filter back on, and I found that it's not as true on the 4 tick, but on the 8 and the 12, very, very true. So essentially, I think what David's saying is he's taking signals in sync with the filter. And it sounds like you may have your filter the same size as your brick, which is fine. That's absolutely fine. The Raptor filter, there's various ways you can use it. You can use it as a confluence indicator. So when it's in sync with your signal, and like I said, I have a feeling David's probably got his on a brick size the same as the bar. And that's, again, that's fine. It's all about, like I say, we've opened up the Raptor so that you could experiment with it a little bit, play with it somewhat. So when the signal is in sync with the filter, David would be looking at taking those signals, and that's a great way to use it. That's how it started. More recently, I've been using the Raptor filter more as an indication of who is in control of the market. So when you see these blue blocks, obviously the market is bullish. I'll be looking more for buy signals. Red blocks, the market is bearish. I'd be looking for sell signals. But note the size of the block. So here we had a blue block and a red block. They're more or less equal. Now we have a blue block that's getting a little bit larger than the red block. That to me suggests that there's more buying pressure. A little bit of red. Okay, definitely the blue is starting to get bigger than the red again. So once again, I would favor more of a bullish follow through. When you get to that point where the red blocks start to outweigh the blue blocks, probably somewhere around here. See, we have the blue block. Now we definitely have a red block that is larger. Now you can take a little bit more confidence in your shorts. This is sometimes why I will get on board. I'll call this an early number 1 signal. Obviously, the cloud's not fully crossed. They're only about halfway, maybe 3/4 of the way there. But we've gotten a lot more bearish in our filter, haven't we? And you can see the follow through there. Same thing will happen. Eventually, we'll get a blue block in here, and then we'll see which one gets bigger, the blue one or the red one. So that's a very simple way that you can use your Raptor filter as well. Cloud's fully crossed now, however, and if this holds, if it comes down, we will produce a number 1 signal. No, we won't now because we've gone too far, but now the bigger question becomes, well, what's the trend? Is the trend up or is the new trend down? We don't know yet. If we call this a sideways trading range, this little bit up here now is our breakout. So you could look to short. You could throw your order in here already, your little just in case order. If in fact this is a break of the significant swing area, we can or should expect another move lower. Yeah, you could also make a case that This red bar buy is just a bigger retest of the earlier breakout. That's true too. So we got a couple of things going on here on the charts this morning. I think one thing's for certain, if we break this low, the market will probably head lower. So you could just throw a just in case order below there. Now we also have, if this was the sideways trading range, we have the reaction to it. We have the red bar sell, just the continuation signal, the regular hard edge bounce. But the market's slowly starting to back itself into a corner. So we essentially have it pinched. If it breaks below here, there's a good chance it will head lower. If it breaks above here, there's a decent chance that it will head higher. Yes, you could try to get in earlier here. And we'll probably have some signals already. Oh no, the Hawk's a little conflicted, as is the Falcon, as is the Raptor. Okay, well, we're going to produce maybe another number one signal here. The clouds again fully crossed. We've got the warning dot. Once again, you could set up with your just in case order. You could frame it something like this, I suppose. This is more or less the same trade that we were looking at on the Eagle. Just looking for everything to come into sync. Okay, there's now the number one signal. Given its proximity to this swing low right here, I'd either give up the extra ticks or wait for a second push opportunity. The second push opportunity simply means we allow the signal to engage and we see where the market reacts. And then that reaction bar becomes our signal bar. So we'll see here if we can get a couple of bars in our favor. Then we'll have a very well-defined support zone. That we could use for a second push entry opportunity. All right, so there we go. If you wanted now, you could adjust your entry to enter below these bars right here. But, again, for the couple of extra ticks, I think I'll leave it just where it is. Otherwise, everything sort of looking in sync, kind of, sort of. Wow, look at their volume is light. Did you see the slippage there? That's some crazy slippage. We got slipped like 4 ticks on that. I'm going to have to start using the stop limit orders to avoid the crazy slippage. Actually got filled a little bit better here on the Eagle than the Raptor. I don't know if they're going to try to get into that early opening gap, early range opening gap that we had. Okay, so I'm going to take the Raptor trade now to break even. I'm going to get a little bit more aggressive here on my Eagle trade as well. Take that down to break even though I haven't hit my target yet. And I think they just tagged me, doggone it. They tagged me at break even on both trades. Darn it. Now they'll probably head a little bit lower now that they tagged me out. Yeah, it's crazy the kind of slippage we're looking at here. I can't account for the apparent lack of volume other than to suggest that traders are just kind of sitting on their hands waiting to see which way the market's going. Yeah, Dan, you got it. They're all shopping Cyber Monday. They're all sifting through their emails. You know, the thing about Black Friday is that at least everybody expects it. The newspaper is so thick with flyers. Oh, there they go. So the follow through showing up a little bit late after tagging me out on that little hiccup. Well, a little more follow through. Yeah, Dan's saying, speaking of newspapers, which one? Investors Business Daily or Wall Street Journal? You know, the thing I find with the news is that they tend to um, the news, of course, doesn't drive the market. They're both good. I probably favored the Wall Street Journal a little bit more. I'm a little ashamed to admit it, but I am woefully underinformed as far as the news is concerned. If it wasn't for, especially for my wife, who is a news junkie, and several of our friends, I wouldn't know what's going on in the world. I really wouldn't. Yeah, Dan says you might be better off. I figure if something really important happens, I'll hear about it. And like I said, my wife's a bit of a news junkie. She'll turn on the television in the morning and watch the morning news, and it's like, oh, wow, do you really want to start your day that way? All right, here we go with yet another number 3 signal in sync. It's yikes. Let's see if we can get a second push on this one. I'm going to hold out. It may well run right past me. Yeah, come on, give me that second push signal. There we go. Okay, so there's 1 bar. Give me 2 bars. I'm going to hold out for 2. There we go. Okay, so now I have a pretty well defined bottom, right? Yes, I gave up a few ticks. I gave up like 4 or 5 ticks here before I'm even getting my entry, but my objective is to try to stay on the right side of this trade. I don't want to be coming in here late. Oh, actually, that reminds me here. We spoke about this the other day. I forget who brought it up. Might have been Phil. Not that it matters. Where's the moving average? There we go. What I was going to point out here to you is, David, since you're watching MACD anyways, is MACD is a pretty good divergence indicator. Divergence is what occurs when price does one thing and then your MACD does something else. Normally, you expect your price and your indicator to move the same way. Now let's see if I can find some divergence. Well, I guess this would be some divergence here. So price is going down, MACD is going up. What's significant about that? Prices will tend to catch up with the indicator. Not to give you something else to focus on, but there's something else to focus on. Now, I'm only pointing some of these things out because I'm thinking of it. Do you need to have MACD on your chart? No, you don't. You don't have to have it there. A lot of these things are already factored into your Raptor programming. Not divergence, though. That's one thing that the Raptor does not obviously pick up on. Okay, so now maybe we're seeing the bull trend that we saw earlier in the day here try to kick in. We've got a secondary resistance line here at 66.40-ish. All right, I may have to consider bringing my stops in really, really tight. You see, we have a little bit of resistance right here, kind of all across the same zone. I would really like to see this 1 bar finish lower, or at least 1 bearish bar, so I could roll my stops with a little bit more confidence, but I may have to get a little bit more aggressive here. Kind of goes back to the liquidity issue. All right, into the hard edge now. I guess I'm going to look at taking my stop out here, because if they continue higher from here, we're very likely going to produce a number one signal, a cloud crossover signal, and that's going to in turn make things a lot more bullish. The seller's got to pick it up here soon. All right, they're now a number one signal to short, so everything's coming back into sync for the moment. I am debating how aggressive I want to be with my stops here. I will bring my break even up. Generally speaking, I try to keep my stops 2 swings back. The market very often challenging the first swing point, but not always successful taking out the second swing point. Am I going to regret not being more aggressive here with my stops? It's coming down to crunch time. We got ourselves like a little mini pennant forming, a little sideways triangle. Well, they tagged me out. It's part of the game. And now, since it seems as though they don't want to head lower, I may try another buy signal here. Oh, look at that. They went high enough to tap me out. Stinkers. Oh, volatility definitely up a bit. Got a lot of sideways trading going on here. Look at the hawk. The hawk, what a mess. Yuck. Too many bars, too many signals, too many yellow bar clusters. Filter keeps breaking up. Ew. Here's that block of buying and selling that went through that spoiled my trade. Wow, what a mess. Honestly, what a mess. Well, we keep seeing the market try to head lower. It's not heading lower. That does open up the possibility of a buy. Technically, this would be a rule of three signal now on the Eagle. 1, 2, 3 counter trend signals. We do have a downtrend. 3 counter trend signals on the other side of the band. We have had a couple of retests of the low. Again, that is a counter trend signal. Well, counter trend for the immediate downtrend. With trend, I suppose, if you're looking at the rally that started this morning, just overall a real mess. I don't know how else to describe it here this morning. It's just a mess. All right, they filled my long order here. We've got a first micro macro cross on the hawk. Trend change signal on the falcon. Nothing on the raptor just yet. The raptor very neutral. So far. Where's my daily chart? Where did I put it? Here's my daily chart that I converted into a 5-minute chart. Oh, is that right? Yeah, 5 minutes. Ah, that's why it didn't look right. Okay. So here is our day so far. Not much of a clue from that. You can see very, very strong bullishness. I guess we need to see, oh, we had a little bit of a trend line break there. We'll see whether or not it holds or whether the market will actually fail from here. So we're kind of, at least according to a time-based chart, we're kind of getting the market in a bit of a bind, in a bit of a tough spot. All right, hit the break even. Don't look back, not yet. No! Get going. I know I'm running a really tight stop here. They're hesitating off of this zone right here. It looks to be around 66.45. Getting some pushback from the sellers that were shorting there. They're still pushing. I may regret this, but I'm going to try to squeeze them up to here. I think we had a resistance line somewhere near there. Oh, and they tagged me on another reverse. Oh, the resistance line was up there, 66.77. Oh well, not to worry about it. They tapped me out on that little bit of a hiccup, and that's kind of the way things are going here right now. Very unusual kind of day. Can't seem to get any real traction going on. Not higher nor lower. We get these flurries of buying and selling trickling through, and then it stops. All right, so we had a little bit of a sideways trading range here. We had the breakout. We're looking at a retest. A very simple strategy when you spot a sideways trading range and you see where the top end, where the reactionary part is, you could just throw an order in above there. After all, if the market's going to continue in that direction, it's going to need to trade above that high. You could do the opposite as well. Once you see the reactionary low, you could throw a short in below there. I may just stay with the buy order right now. The Hawks really messed up, as is the Falcon, as is the Raptor. Ooh, I hope I got to my mute button fast enough. That sneeze came on pretty quick. They are not giving anything here today. I guess we had this number 2 signal right here, which again is much easier to see in hindsight than real time. Real time, looking at this chart, got a whole lot of sideways going on. A lot of candy striping here with the background highlights, filter all broken up. All right, I think I shall close out that order because we're, to my way of thinking, we're back inside this trading range now. If the trading range is going to hold, there should be buyers down here. There should be sellers up here. If that is true, then we could just be looking for any old buy signal to get long. We're not going to get one on the Hawk, but we could get a buy signal on the Falcon and the Raptor. That again is a very, very aggressive type of trade posture to take. Well, we actually produced a number 1 signal. Okay, we've broken now the bottom end. We've got a really late second push on this number 1 signal. It kind of ran away a little bit. But what we're looking at now is the breakout, the retest. Here we'll see it a little easier on the Eagle. So we have the breakout. Here's the retest. Our Raptor signal is essentially the just in case order that you could throw below there if the trend, if this breakout's going to stick. And so far it's not. All right, so we'll close that, close that. Yeah, just a whole lot of flip-flopping today. We'll stay with them a few minutes longer, then I think we'll wrap it up. All right, the bottom end's not holding. So obviously they're going to try the top end now. So I'm going to look for a buy opportunity. And the Geiger counter full on bull. Lots of buying coming through here. All right, now the break here on the top end of our little trading range that we identified. Come on, give me a bearish bar. You can do it. Going to get the cloud crossover signal here on the Raptor. So that's what I'm waiting on. Oh, you guys. Look at that. Again, that kind of goes back to the liquidity issue. We've got a warning dot for a first micro macro cross higher. Come on. Give me that bear bar. I only need one. Oh, they're stubborn here this morning. Come on, you stinkers. Oh, really? It's really rare to get shut out like this. The first micro macro cross here on the Hawk. Um, so far, the only real signal we've had. All right, there now is the bear bar that I was waiting on, so we can get the. We're going to be looking now at a retest of this area right here. That's a significant swing point, I would call it. Therefore, I can reasonably expect two moves in the direction of the breakout. There's move number one. Now I'm looking for move number two. So to that end, I can be on the alert for pretty much any buy signal. I've got a macro pullback signal here in the Hawk. I'm going to produce a number one signal here in the Raptor. I'm going to produce a trend change signal here on the Falcon. Where's our proximity to the other swing high? Yeah, so there's kind of the high of the morning right there. It's a little bit cozy, but there you have it all the same. The closer we get to this 66.47-ish zone, the more likely it is that the buyers are going to step up. That's also not quite to the hard edge, but reasonably close. They may take their time making this one happen. And there's that block of buying that went through. Well, if they don't hurry up here, I think we're going to close up shop anyhow at the top of the hour. You know what we're looking for? Looking for a retest. Looking for evidence the market will continue higher and not fall back inside this trading range. It's all right if it falls, around the 66.44 zone. I don't want to see it get all the way back down here to around 66.38. That would definitely negate the breakout. But the fact that we have broken out and the fact that we have exceeded a couple of significant swing highs, like I said, that really does open up the possibility of another rally. Here now, a 4-arrow consolidation in the Hawk. And they keep slipping lower. All right. Well, that's what I'm going to be watching for as the morning progresses. If the highs hold, though, if we do end up getting a double top, You know, there's the high of the morning. Here we are with the second attempt. If the market does fall back inside this trading range and this breakout fails to hold, then that opens up the possibility of shorting and watching the market trying to recover all the way back to the lows of the morning, maybe even filling that big opening range gap. So that's what you need to be on the lookout for here. If you choose to trade for the remainder of the day, okay, we're back now looking for that retest. Somewhere that retest has got to come. Oh, look at that. They're just falling off way too sharply. Give me that little bullish bar and I will short you. Come on, just one bull bar. All right, well, I'm going to wait for a bullish bar to form. Then I will throw my short order below there. So essentially, it's going to be like an OCO style order. And then we'll have the market pinched. You could try to get more aggressive on the buy. There's the bull bar. But you know what? It's such a crazy range here today. I may just leave well enough alone. I know there's a lot of money to be made on a bullish rally, but it's really, really difficult to gauge right now. All right, gang. I will see you again tomorrow. Be careful out there. I'll talk to you then. Bye for now.